But then one day they gave it to us before we went to church, and I thought, this is my chance. I used the money to buy ice cream.
Hello ladies, welcome to Women Wielding Wealth. My name is Hallie Edward and I'm the founder of Chubyinitiative. Here with me today is
Kelechi Chuko.
And this is
Money That Moves.
Okay, so in this episode, I'll be in conversation with Miss Kelechi. She'll be telling us more about investing and how to begin if you know nothing about it, and stocks, and just the whole conversation on investments in Nigeria for young women. So, Miss Kelechi, tell us, what do you do?
Well, I'm the founder of The Money Journal, a place where we talk about all things personal finance, money, smart investing tips, and stories as well of people's relationships with money.
So my first question for you is, in your experience over the years, what would you say is the most common money mistake or investment mistake that you see that most women make?
I would say is not starting early enough, because we're always waiting to be spoon-fed, to be told do X, Y, Z and stop at A or something like that. Meanwhile, we're not as curious enough as, let's say, younger men are. You can just go out and try things. If an app doesn't work for you, take out your money, delete the app. If you're curious about something, especially in the world of AI now, take a screenshot and ask ChatGPT to explain it to you with no finance background. Another common mistake is women, we tend to get so absorbed in the short-term financial day-to-day. For instance, I would give, let's say, someone who's married, you're involved in the day-to-day spending, or buying food, buying lights, maybe rent, but then we tend to leave the long-term financial planning to like our spouses, partners. So you see things where you leave the pensions, the retirement planning, the assets that actually withstand time to the men. But then women outlive men most of the time, right?
Most of the show.
Most of the time. So you find out there are women who their partners now sadly has gone or is no more, and they have no idea where to even start from. It's just the day-to-day finances that they were involved in. Yeah.
So would you say it's because no one really taught us, like there isn't much of an educational background in that aspect?
Yeah, I think yes, it is. If you take even the fact that early corporate life was mostly men, and it's even corporates that you would hear things like pension. So you take out a bit of your income towards your pensions that would pay you in your retirement. It was quite, maybe not so recent, but women started entering the workforce, so they are now included in pension planning. But largely the informal side of business, which is people who, entrepreneurs now, they don't think of things like, oh, do I have a pension or a retirement savings plan? Even if it's not cash, it's things like assets. That's why you see men who buy land, because when you're in your middle age to retirement, those are the assets that you now sell to live on.
Yeah. So
I think it's because for the longest time, women were excluded from formal like business and financial organizations. So it wasn't knowledge that was passed on.
They didn't have access to.
Yes.
So how should women think about actual assets to invest in based on their age, the stage that they are in life, their risk appetite as well? How do you think certain women, because we are all young women, we have young women, we have older women, but we're all in different stages in life. So how do you think you could generalize a few stages based on your opinion? How do you think these different people should approach actual investments in assets? So
in finance, there's like 3 basic stages, and that is your early 20s. Yeah. That is your accumulation phase. That is the age where you have relatively low responsibilities, right? So you have more capacity to take on risk than you would, let's say, when you're older, right? So at that stage, early 20s, you should focus on assets like equity assets, because those are high risk assets. So maybe an equity mutual fund if you don't want to pick the stocks yourself, or investing in stocks directly. You could also now look at things like gold. So you could allocate a bit of like 5 to 10% of your income towards gold. You could start really small and then business or income generating assets as well. So a business, for instance, so early 20s, early 30s as well. Those are things you should focus on. Then your there's the mid career level, so your 30s to your maybe early 40s. That is the time where you begin to think proper long term. So you look into long term instruments, let's say a bond, or even mutual funds are long term because they continue in perpetuity. So regularly top off your mutual funds, or a bond that would, a 10-year bond that could pay you income semi-annually, things like that. Then that is where you look at assets that hedge against inflation, like real assets, land, real estate as well, those kind of things. And then equities, you reduce it a bit. So if before you were allocating like 40 to 50% towards high risk assets, you reduce it a bit because now you have more responsibilities, obviously. Less capacity to take risks. Then your retirement phase, basically 40s, 50s, from then up, you begin to prioritize cash. You begin to prioritize liquidity, because that is the phase where you may not be able to be as active towards generating income. So you prioritize cash. You double down on inflation hedged assets like land and gold, and this is specifically for women, anyways. And then, you could reduce your exposure to equities risk and all of that.
Okay. But do you think that in your 20s, if you can get land, you should? Do you think it's something?
If you can, yes. You should. Yes. I think one thing is the if you can, because a lot of people think, okay, land is a great investment, but at the same time, it's not good to be asset rich and then cash poor. Land should be a long-term thing. You buy land 5 to 10 years minimum, right? So you don't want a situation where you've put all your money in land and then you're looking for how to trouble sell in 1 year or 2 years because you don't have enough cash flow or other like liquid investments
passive
that you
income.
could. Yes.
Yeah. Okay. So what would you say was your first real relationship with money, and how did it make you feel?
I grew up in a conservative home. We weren't really handed out money. Allowance was a foreign thing until you got into university. So I think my first relationship with money was, I think, primary school. So before, usually you would be given offering money as you're on the seats to go to offering in church.
Yeah.
But then one day they gave it to us before we went to church, and I thought, this is my chance. I used the money to buy ice cream. I didn't go for offering, but I was in children's church, so I thought nobody was going to. Exactly. But I don't remember who reported me. It was either like a family friend or like a sibling, and my mom slapped the hell out of me. That was like my first experience with spending money. Yeah. So politicians don't start when they get into office. They start from when they are children.
What would you, where you are now and your younger self, what was one thing you'd say you would like to share with your younger self that she should know at that stage she was in life and the stage you are right now?
It's more of a psychological thing, because I used to have a scarcity mindset. I used to think that money was so hard to come by for no reason, to be fair. It's not like I was hungry or anything. I just thought money was something that once you have it, you just had to hold on to it. So it would be telling my younger self that money is a renewable resource. It comes and it goes and is a tool. And if you're not shy enough to say, I want money, a lot of times where people are willing to help you, if you say, this is what I want, right? I met someone recently, I'm like, oh, what do you want to do? I said, I just want to be rich. He said, okay, I love that you're honest with that. Yeah.
Okay. Do you think that women approach money differently because of biology, social conditioning, or
maybe society?
Like societal expectations that they have of them? Do you think this idea itself is a myth?
I don't think it's a myth. I think not enough women rather approach money or finance, their financials, personal finance, with ownership. Some women, the psychology sometimes is that, okay, this is something that is given to you. Because, obviously, historically, it was women who were given money. They didn't really earn money. Or even when they did, it wasn't something that it was your money, it was family money. Or we couldn't even pass down inheritance, even though you had money. If you, your money would just be shared around. It wasn't something that, this is my money. So I think if we approach it more towards ownership, this is my money, this is like my finance, these are my goals, we would be more productive and more financially comfortable to say, yes, this is my money, so I can do what I want with it.
Yeah. I think there's something you said that made me realize, do you think women write wills?
I don't think enough women write wills.
I don't know if I don't think I see that.
I don't think I see that.
And yeah, that should change.
That should change. That's why I said.
And should you write your will right now? Do you think you should have a will?
I think, why not? Obviously, you wouldn't, like, I don't think any lawyer would take you that seriously yet. But you could start planning towards it. Like, when I tell people that I started planning towards my retirement, just even the knowledge, when you think, oh, what would I need to retire? You may not have the money now, but just the knowledge of, oh, I would need a certain amount of money. So what investments, what investment would I have to do? Yeah. We don't think long-term enough.
Long-term, yeah.
Yes, so women, we should be writing bills, because I've heard of, like, a few women who were influential had a lot of money, and then I wonder what happens to that money when it goes. What happens to it?
So yeah, start writing wills.
As
long as you have assets, write wills.
Exactly.
If you don't have children, you could give it to a loved one. You can or to an NGO.
Exactly.
Or your pets, because some people do that. Okay, so down to investing now, because I have no idea how to invest, and I feel like it's something that we need to start getting into. How do you invest? How does Kelechi invest?
Okay, that's interesting. Currently, I do 3 things. So I'm heavy on saving. So my emergency fund, I use Piggyverse actually, and it debits an amount every day, because the basic thing you would hear on the internet is, 20 to 30% of your income in a month should go to an emergency fund. Yeah. But not a lot of people can actively say, I'm taking out this amount of money towards an emergency fund. So it's easier for me to just do it daily. It goes somewhere, and it's an emergency fund. Then towards investing, I have 2, so low risk and high risk. Okay. Low risk for me is a money market mutual fund, which most people would say a high yield savings account as well. They are quite similar because they are invested in the same thing. Just to break it down, a money market mutual fund, just like the name implies, is a mutual fund. People bring their funds together, and then a portfolio manager professionally invests this fund for them, and then you get returns based on the performance. Very easy, right? So money markets, by the name implies, is where it's like a type of investment where people go and exchange money for money. For instance, treasury bills. Treasury bills are government instruments. You give the government your money for a short period of time, they give you back your money plus interest.
Just like that.
Just like that, right? So it's not money for money. It's not, for instance, stocks or equities, where if you invest in a company, you're getting shares of that company, ownership in that company.
Yeah.
You're giving the government your money, you're getting back your money plus interest. So money markets instruments are treasury bills, some form of bonds, commercial papers. Those are the things that constitute money markets instruments, fixed income investments. They are low risk, right? Contrary to what people think, but the Nigerian government actually is a low risk investment, investing with the Nigerian government. So I do like a money market mutual fund, low risk, and then high risk, I do stocks, straight into stocks. And I know this is the one that lots of people want to know about. Yeah. But one thing I want to preface with is that investing in stocks is not for everybody. You remember when Bobrisky said it's not for everybody, right? Because it's high risk. You could put 200K in a stock and in a year make 1.4 million. At the same time, you could come back next year and your money is 50K. This is the part that a lot of people don't talk about, right? Because you're investing in a company. It's based on their performance and the economic markets at the same time. To invest in stocks, you could do an equity mutual fund, which is where you put the funds together, a portfolio manager invests in stocks. For people who don't want to cherry pick, who don't have the time to go and start looking or
doing research.
Exactly. Yeah. You could do that. It's even lower risk than investing directly in a company. But if you want to invest in a company, great. You could use a stockbroking app. So those apps you see where they have stocks, they are called stockbroking apps. A stockbroker is like the access between you and the company you're investing in, for simple terms. You find the company that you want to invest in. One thing you should pay attention to is the company's performance, right? And if you're not someone who can read financial statements, you should just be able to tell by their year-on-year performance. For instance, I'll use a company like MTN. MTN increased their data tariffs last year by over 40%. Everybody was complaining, but nobody stopped using MTN. So you can tell that they're
this is
still
a
going to be making money. Exactly.
Yeah.
This is a consistent money making business. Dangote, for instance, you know that year on year, we haven't heard, oh, Dangote is like in a battle where he's owing people money, those kind of things.
Yeah.
Or banks, for instance, because banks are the most liquid assets on the stock market, and everybody uses banks.
Yeah.
So just play safe, things like assets like that. Don't get carried away with FOMO. Because there's a lot of information on the internet, right? Some for your good, some not for your good. Stick to fundamentals. Don't panic sell unless you know that, okay, this is not working out again. Like articles have released this company, it's not working out again.
Yeah,
those kind of things.
Something's about to go down.
Exactly. Right? And if you don't even have the strength to do all this, get an investment advisor.
Is that something you do?
Yes, that's actually what I do. So there are companies who actually have investment advisors. You open an account with them, and they give you day-to-day market updates, help you with like balancing your portfolio, things like that. Yeah.
Okay. So it doesn't really seem that hard.
It's not. The first step is being curious enough. Being curious enough to actually do some research for yourself. In finance, we say that historical performance does not guarantee future returns, but then just being able to do a little bit of research on a company. For instance, there was a company that was raving on Twitter. The stock price kept increasing, and people were saying, invest in it. I'm going to say it's Japan Gold. Japan Gold has been on the stock market since like 2003, 4. That was when everybody was buying 2005, 2006. And then it tanked 2008. And it has, imagine, it was like trading like 0.5 kobo, something like that. It has been bad, right? But now it's coming up, and then people are like, it's gaining a lot of money, you're making lots of money. If you do a quick research on Japan Gold, you would know that if it has been around for that long, their stock price should not be 2 naira, 3 naira.
Yeah.
Do you get? So just that simple, Japan Gold in Google search, you would be saved. So the first step is just being curious enough to do research. And
like you mentioned earlier, if you don't want to take out the time to, you could also use AI.
Yeah, exactly.
Just tell me more about so company.
Yeah, okay. But in a world where you have the resources laid out for you.
Okay. So how do you, I think you've spoken about it a bit, but is it a gut feeling thing that, okay, I should invest in this company?
To be honest, it can never be a gut feeling thing, because I'm lucky enough to work in finance. I work at Cardinal Stone, and we're number one on the stock market. We have A-class research team, so I have that data at my disposal. And to be fair, we have a research portal. Cardinal Stone research portal is data open to everybody. So for me, it can't be a gut feeling. It's data backed, to be fair.
Okay, so you guys should definitely listen to Kelechi, because she knows what she's doing. So do you have any final notes to the beginners that are just getting into being more conscious and intentional with the way they spend their money and invest their money?
I would say just be curious, that's one. 2, don't feel like it's a do or die.
Yeah.
You prioritize things like actually having money, actually having income before you prioritize investing, because a lot of people come to me, okay, Kelechi, I have 500k now, and I ask, what's your steady income? Because you can invest this money now, but if you don't have steady income, you take out your investment.
Yeah.
And investments are supposed to be long term. So don't feel like you're behind in life because everybody seems to be investing in stocks and you're not. Everybody seems to know what they're doing. No, prioritize steady income flow. Prioritize your goals. It doesn't look the same for everybody.
Of course. Yeah.
Personal finance inherently is personal. So yeah.
Okay. Thank you so much for coming on Women Wielding Wealth. This was a very necessary conversation, and I believe that most women out there would benefit from this. And if you want to know more about investing and financial tips, I think you should follow Miss Kelechi The Money Journal on Instagram. Do you have any other social platforms?
I actually do. They love me more on TikTok, funny enough.
Okay, so what's your TikTok?
The Money Journal as well.
Do you have LinkedIn?
I have LinkedIn, but it's a personal LinkedIn. And I also have a Substack.
Okay.
I write from time to time.
Okay. Thank you so much.